Hello.
Hello, hello. How you doing, Trent?
How are you?
Hey
Good.
guys, there's
Hello.
Paul.
I'm finally thawed out, I think.
Thawed
Really?
out?
Yeah, after all this Arctic freeze coming through.
Uh,
We've been in the 60s this week here in the middle of the country. It's been nice.
In the Midwest, we're like maybe gonna be high 40s. It's nice today, I guess.
yeah.
Cloudy,
Hey
overcast,
man,
cold.
hey Manny, are
Yes,
you
sir.
the one who's having an issue with getting into the Discord?
I was at first. You know what was happening to me? I don't know why it happens on my computer, but it seems like every 3 months the password resets itself. I don't know if that's automatically or what, but I keep forgetting my
Yeah.
password, so I got to make up a new password because by 3 months, so I got to write it down. My wife took care of all that, but yeah, that was me having that issue. I don't have that issue no more though.
Okay. All right.
I've been having
Yeah.
a problem, Trent, getting into it every once in a while. It's like it doesn't recognize my username or password, one or the other. Not
Yeah.
sure which, but and then all of a sudden the
Okay.
next time I try it, it'll work. It'll not work 3 or 4 times in a row, and then all of a sudden it works. So I don't complain,
Okay.
other than
Okay.
this
Well,
time.
I'll try to figure out what's going on. It's just because a handful of people are having that issue as well. So I don't know why it locks people out. I haven't been locked out, thank God, 'cause I'd be scrambling trying to figure out how to get in.
Huh.
But I don't know why it's doing it, so I just wanted to bring it up. Cool.
Sounds good.
Yeah,
Oh,
and then it was kind of going on my mobile. It was also doing the mobile was doing the same thing, but once you reset everything, it seems like the mobile comes back online, and then my computer will come back online.
Okay. Cool.
Uh-huh.
All right, Mark, you want to get going?
yeah, we got a lot. There's a lot of stuff happened this week. Um, just seems like one thing after another. So we'll get going. When I was thinking about what happened this week, I think I titled what my thoughts today about the little elephant in the room is what my thoughts are today. But first, I wanted to kind of look at some of the economic reports because there were a ton of them this week. First, the big thing was the interest rates, and the Federal Reserve held interest rates steady. Uh, it was kind of interesting that they removed the language acknowledging easing inflation from its latest policy meeting statement. But Powell said in the press conference that the reference to inflation was merely an effort to shorten the sentence rather than convey any significant message. Okay, so what they took out was the, that that the inflation rate is continuing to move towards their 2% goal. That was taken out, and I think I have less respect for every time they come out and start talking because they're talking out of both sides of their mouths because he kept saying that inflation has come down and inflation is reduced. And then we get the PCE out here, and I'll talk about that in a second. It shows that we're not. Okay. So what he's talking about is the rate of inflation has been down from 9% month over month to, 2.9 or 2.8 or 3, whatever it is right now. So they never clarify that, and no one ever asks that question. So anyway, it's frustrating for me to watch it. GDP came out, the economy expanded at an annualized rate of 2.3% in the fourth quarter, and that's the slowest growth in 3 quarters, down from 3.1% in Q3, and the forecast of 2.6%. The outlook for the economy this year is one of more moderate growth. The latest Bloomberg month uh, survey shows GDP growth will cool to 2.2% on average, with economists anticipating only a few Fed interest rate cuts. So that's interesting that the GDP is slowing uh, and that we've taken out reference to getting back to the 2% uh, goal for the Fed. Government spending rose on an annualized 2.5% following a strong third quarter advance. It was led by defense expenditures. So a lot of our expense was for buying probably weapons for Ukraine and Israel and wherever else we're supplying them. Consumer spending also advanced at a 4.2% pace. That's the first time since late 2021 that outlays have exceeded 3% in consecutive quarters. The acceleration was led by a pickup in motor vehicle sales. So more motor vehicle sales, it's a higher priced item, so on. Plus you have to finance those. So U.S. economy is really about credit at either the individual level or the federal level, because at each level, if we're increasing spending in the federal government, that comes from printing money or borrowing money in the treasuries and buying a car or buying anything. People, you can see in our credit cards, our debt is up at the highest levels ever in credit cards. Then today, the PCE came out, and this is supposedly the Fed's key indicator for inflation. And it increased by 0.3% month over month in December, the highest gain in 8 months, again, going up, compared to 0.1% in November. Prices for goods increased at 0.2%, following a flat reading on November. Prices for services are up 0.3% above the 0.2 in the previous month. The core PC index, which excludes food and energy, because we all know we don't use those, rose by 0.2%, slightly higher than the 0.1% in the previous month. So they've all gone up. On an annual basis, the headline PC inflation rate edged up to 2.6% from 2.4%, marking the third consecutive monthly rise, while the core inflation remained steady at 2.8%, both in line with forecasts. So again, I hear them talk about inflation coming down, but I don't know if they read their own reports, because when I read it, unless someone can explain to me, it seems like it's going up to me. Anyway, within that PCE report is also the personal income. So U.S. personal income rose 0.4% month over month in December, in line with market expectations, following a 0.3 increase in November. So personal income has gone up, which is a good thing. However, we also have a report today that right onto that with personal spending. Personal spending in the United States rose by 0.7 from the previous month to an annualized rate of $20.38 trillion in December, following an upward revised 0.6% in November, and beating market expectations of 0.5%. So our income's gone up, but our spending's gone up beyond our level of our income. So we're still, tells me we're still out spending on credit. The employment costs came out along with this report. Compensation costs for civilian workers in the United States rose by 0.9% in the fourth quarter, up from an 0.8 increase in the prior quarter. So again, employment costs are coming up. That's also inflationary. And so it'll be interesting to see, coming down these months when we get the, PCE or the, CPI and PPI next month, which will be a couple of weeks, what's happening. But I think that what I'm seeing is inflation is coming back up. The Fed is seeing that, and that's why they're not lowering interest rates, even though they say the economy's good, everything's good. However, their reports don't tell me that. When we look at mortgage applications, they fell by 2% from last week, trimming the 33.4% surge from 2 weeks earlier. It was the sharpest increase in weekly applications since 2020. But the mortgage rates for a 30-year fixed rate mortgage in the U.S. is at 7.02% in the week, the same as in the previous week. We were talking yesterday, we were on the Platinum Live about mortgage rates, and Bob and I were talking about from Florida and New Jersey about it's almost back up to the level when I built my house in 1999 here. I had 7.75% interest rate, and now we're back up into the sevens. And I told him, we talked about it, I said, now because the cost of building and the cost of the valuation of my house, if I were to come today and buy it at 7% interest with the increased insurance now and the increased property tax and the increased valuation of my property, I probably couldn't buy it today. I probably wouldn't be able to afford the monthly payment because of that. And that's why we're seeing housing is hard to get into, especially for younger people and people without down payments now. So it's interesting, even building new houses. U.S. durable orders came out. New orders for manufactured durable goods fell 2.2% month over month, following a downward revised 2% drop in November, and far below the market expectations of a 0.6% increase in durable goods or big item goods, which drive the economy. Housing prices, the S&P Case-Shiller 20-City Home Price Index in the U.S. went up 4.3% year over year in November, above the 4.2 in October, in line with expectations. So housing prices continue to go up, which to me are inflationary. Um, the fifth district manufacturing and service index came out. That's, I think, Virginia. And the headline was it rose to -4 in January, which is still not expanding. It's going down from a -10 earlier in the month, and it's ahead of expectations of -8. In the service sector in the fifth district, it declined in January with revenues index dropping to 4 from 23. So it's still in expansion mode. It's just not at 23, it's at 4. And the last thing in the economy, just, as far as looking out at what's happening in the market, a gauge of insider sentiment that tallies the number of buyers versus sellers shows there were just 98 companies where at least one insider purchased the company's shares this month through January 22nd, compared with 447 companies at which at least one insider sold, according to data compiled by the Washington Service. This buy-sell ratio at 0.22 is currently on track to be the lowest in data going back to 1988. So we've talked about, especially in the Mag 7s, you're seeing a lot of selling from the higher ups and the executives. Anyway, just keep that in mind when you're buying or when you're investing. and so now, like the little elephant in the room this week was Monday, the whole DeepSeek thing. And DeepSeek's a 1-year-old startup, and they revealed a capability. They presented a ChatGPT-like AI model called R1, which has all the familiar abilities operating at a fraction of the cost, they say, of OpenAI's Google or Meta's popular AI models. The company said it spent just $5.6 million training its newest AI model, compared with the hundreds of millions or billions of dollars U.S. companies spend on their AI technology. If DeepSeek was indeed able to match the performance of OpenAI's best model on far less than NVIDIA GPUs and at a fraction of the cost, then the implications are that the demand for NVIDIA's GPUs, which is driving the company's stock price up, may go down in the future. And more broadly, the entire AI market could be overblown, as seen by the performance of the AI companies earlier in the week. Since then, we've seen some earnings come out in some of the mags and have brought it back up, but NVIDIA still is hugging its 200-day moving average right now. We'll talk about that a little later. Shares of NVIDIA on Monday fell 17%, and it wiped out $593 billion from its market value, a one-day record loss for any company. Prior to Monday's sell-off, NVIDIA shares were trading at nearly 60 times the value of its earnings, compared with 22 for the entire S&P 500, and that's data from Vanda Research. Vanda Research showed retail investors' purchases of an NVIDIA share totaled a net $562.2 million on Monday, the largest amount on record going back to 2014. So retail investors bought the dip, and right now they haven't been rewarded on that yet because it's still hanging around the 200, and we'll see what happens. It's bouncing off the 200. I'll show you the chart, but the oscillators still don't look very good for NVIDIA at this point. This sell-off has brought into the spotlight the crowded positioning among investors, meaning how many people are in these mag stocks, and the billions of dollars U.S. tech giants are spending to develop AI capabilities, as well as how expensive some of these companies' shares are relative to the broader market. So the valuations of these companies are high, so there's hardly any room for, the valuations, compared to future earnings is why the stock prices are so high. And if they start to show, chinks, or you're spending more money with less return, which is what this DeepSeek story is trying to imply, that they're overspending, they're not going to get that money back because DeepSeek can do it cheaper, blah blah blah. Then these companies are overvalued, and you're going to see their price come down, and that's what we're looking at, when we talk about the valuations. Of course, it's not that simple. DeepSeek, we got to remember, is a Chinese company, specialized. It's a hedge. It came out of a hedge fund. Could actually be running more GPUs and train its models at a higher cost than publicly known. They've been known in China to stretch the truth or not even utilize the truth. But it did get the attention of Wall Street. Mark Andreessen, one of the world's leading tech investors, called DeepSeek one of the most amazing and impressive breakthroughs I've ever seen, and that was on X. Bloomberg's Mark Cudmore said earlier that the emergence of DeepSeek is terrific news for the global growth and productivity. However, he cautioned that the new free open source large language model undermines the massive premium paid for AI research and development by US megacap stocks, warning that this development could serve as a catalyst to end the 15 years of the US stock market exceptionalism. Jefferies analysts told clients concerns have immediately emerged that it could be a disruptor to the current AI business model, which relies on high-end chips and extensive computer power and hence energy. JP Morgan Market Intel told clients the DeepSeek story is forcing investors to question the market position of all the mega cap tech names in the entire AI supply chain. Billionaire investor Ray Dalio issued a warning Monday when this all happened about a potential bubble in the US artificial intelligence stocks, drawing parallels to the dot-com bust of the early 2000s, where we were in a cycle right now. It's very similar to where we were between 1998 and 1999, Dalio told the Financial Times. But there's more. Chinese tech company Alibaba Wednesday released a new version of its own Qwen 2.5 artificial intelligence model that it claims surpassed the highly acclaimed DeepSeek V3. Qwen 2.5 Max outperforms almost across the board GPT-4, DeepSeek V3, and Llama 3.1. Alibaba's cloud unit said in an announcement post on its website, referring to OpenAI and Meta's most advanced open source AI models. So for Wall Street analysts, the developments raise serious questions about elevated valuations of AI-related stocks and Silicon Valley's business model of massive research. Potentially groundbreaking open source technology has called into question the gargantuan AI investments made by American companies. Magnificent Seven, a group of 7 Wall Street's biggest companies by market cap, now accounts for a third of global market value, compared with about a fifth 2 years ago. This means that the performance of the S&P 500 is increasingly tied to the performance of these Mag 7 companies. The Mag 7's combined market cap in the NASDAQ 100 is significantly higher than the S&P 500. It hovers around 40 to 50%. This means that the NASDAQ 100's, which is QQQ, performance is even more closely tied to the fortunes of these 7 companies. As we've been talking for a while, market momentum has been riding the coattails of the Mag 7 stocks for the past several years, and as goes the Mag 7, goes the market. On Monday, or as of Wednesday, NVIDIA was down 13%. It's been hit by a double whammy of China's DeepSeek offering apparent low-cost AI and reports that the current administration is weighing additional limits on the sale of the company's chips to China. So after that, everyone was waiting for Microsoft and Meta and Apple, Tesla to come out to see what they were going to say. They were kind of in a quiet period because they had their earnings coming out, so they really weren't able to address this. So when we looked at, investors were looking to Microsoft and Meta to provide reassurances that they will keep spending heavily on NVIDIA chips to power future AI services, and they only got really part of it. And while the two companies reported a combined $37.4 billion in capital spending in December quarter, ahead of analysis expectations, Microsoft said growth of its spending on AI data centers would slow next year. Azure revenue growth slowed to 31%, below the 31.8 expected, and at the slowest in a year. Meta did beat Wall Street expectations for fourth quarter revenue on Wednesday, but predicted sales in the current first quarter may not meet forecast, sending mixed signals about how its bet on pricey artificial intelligence powered tools are paying off. Mark Zuckerberg was a little more bullish. He said that it was too early to judge that DeepSeek's advanced mean that heavy capital spending on AI won't be necessary in the future, and valuing hundreds of billions of dollars worth of investment in the long term. However, Meta talked up its use of in-house chips, which is developed with Broadcom, as potential replacements for some servers currently powered by the graphic processing units made by NVIDIA. In addition, Zuckerberg's Meta assembled 4 war rooms of engineers to determine how Chinese hedge fund managed to release an AI game changer that may rival its own technology. Meta AI infrastructure director Matthew Oldham has reportedly told colleagues that DeepSeek's newest model could outperform even the next version of Meta's Llama AI, which Zuckerberg said could be released in early 2025. The information reported Sunday, the report cited 2 employees with direct knowledge of Meta's efforts to catch up. Of the 4 war rooms Meta has created to respond to DeepSeek's potential breakthrough, 2 teams will try to decipher how Highflyer lowered the cost of training and running DeepSeek with the goal of using those tactics for Llama, the outlet reported. Among the remaining two teams, one will try to find out which data DeepSeek used to train its model, and the others will consider how Llama can restructure its model based on attributes of the DeepSeek models. Tesla then came out in the fourth quarter. Tesla reported revenues of 25.7 billion, well short of the 27.8 billion expected by analysts and just up 2% a year ago. For the full year 2024, revenue rose 1% to 99.7 billion. Adjusted earnings per share came in at 73 cents, less than the 75 cents Wall Street was forecasting. Operating income totaled 1.58 billion, down 23% from last year, while adjusted net income rose 3% to 2.6 billion. Tesla said its operating income was negatively impacted by costs associated with artificial intelligence and other R&D projects, as well as lower average selling prices for its current products, these cars. So again, you see, even with Tesla, they're spending a lot of money, and what shareholders want to see is what's the return on that. What's the return on that money? Tesla said it expects capital spending to surpass $11 billion this year, and in the next 2 fiscal years. In October, the company had projected spending between 8 and 10 billion in 2026. And then the last one to come in was Apple. And Apple was kind of a surprise because everyone was thinking Apple's really going to be the underperformer. And their overall revenue rose 4% in the first quarter, but it missed on Wall Street's iPhone sales expectations and saw sales in China decline 11%. But shares rose about 3% in extended trading after the company gave a forecast. For the March quarter, they suggested revenue growth. Apple said it expected growth in the March quarter of low to mid single digits on an annual basis. And companies also said it expected low double-digit growth for its service division. So putting that all together, what's that mean? I don't know. You guys tell me. What's your? I'm going to open it up because that was a lot of stuff, and I'm not sure I really learned much, from these earnings reports. So I want to hear from you guys what you think. Have we hit a wall? Do we not know what's going on? Do we know what's going on? Do we believe China? I don't know. Trent, you want to start?
Sure. So I think when I read about DeepSeek on Sunday, what it basically said to me was you always have the first guy through the door, and he's the one who takes the biggest hit, in this case, financial hit. So the hundreds of billions of dollars that OpenAI has spent and raised and spent since 2015 when they started this project, that had to happen. And now you have this whole first tier of group who've developed this AI product, this foundational product. Now you got a second tier happening, and that's what DeepSeek is. That's what the ex-head of China's Google division is now running. Alibaba now. They're all sort of piggybacking. And when you start to learn about how DeepSeek is structured, they're taking this mega model of OpenAI and they are refining it and they're doing it a little differently. I think a lot of this stock price movement is a combination of overvaluations on these 7 companies. They need to come down to more reasonable valuations. And this was a news item, a headline item that just started the fire. And I think that we should be aware of that. I think when it comes to AI spending, our biggest challenge in this country right now is the infrastructure side of it. They all have said energy is their biggest problem. They're going to build buildings, they're going to build infrastructure, and that was where a lot of this money goes. But what it says to me, though, is that you and us, we now have the capability of starting to create products or services on these platforms because they have eliminated the biggest hurdle, and that's computer programming. So I'm excited about it. Am I excited that a lot of this noise or stuff is coming out of China? No, because I'm patriotic. I want to see America do it. But I do think this just shows the initial guys through the door are going to get questioned about the cost that they've spent. And we should expect that. We should expect more volatility at the top end of this area of this range because the valuations in these companies are out of whack. It creates opportunity, but I think for the advancement of AI, you have to anticipate this is going to come faster and more feverishly, and you're going to have the 12-year-old kid and his buddy who's 11 who come up with some AI product, and they're going to come out of their, Arkansas backwoods, house and say, hey, we just invented this and it eliminates HR. To me, that's where this is all headed. So I think this has a lot to do with valuations of these companies. They're very high. I mean, NVIDIA was 56 forward PE ratio prior to this. It's now, I believe, 42 or 49. So it's coming down in valuation. But in my opinion, it has to come into the 30s. So we'll have in my opinion, a run up in these tech stocks again. We'll hit a roof, and then something else will bring it down, and these valuations will come down. But I think the advancement of AI is it's a fact, and we should expect news items like this going forward. So
You were talking about energy, and I just go back to the DeepSeek and what they said they did. Now, whether they did it or not, I have no clue. I'm just going on what they said. And some of the, we got some of the quotes from some of the big houses, including Mark Andreessen, who looked at it and appear to be impressed. Even the AI guy, AI company guy, said it was good. But what they said is that they were able to do this under $6 million and with less energy because they're not using big chips. Now, whether you believe that or not, I don't know. So I would think, you and I talked earlier this week, Trent, and I said, I bet there's a lot of meetings going on at these high tech companies, which we found out, at least in Meta, they are. That do I need to spend that much on power if I can come up with a solution, say that what DeepSeek is true, that I don't need that much power anymore? So that cuts back on the amount of cost that I would have to spend, and my overspending. And so that's where I'm looking at it is, are they going to continue to spend at the level they're spending? Microsoft already said they're not. Okay. And if they are going to decrease spending, what's it going to be decreased to?
I think the one other thing you have to look at is when you get into the technicals of DeepSeek, the structure of how they're doing it is different. It's more efficient. So so OpenAI has what they call experts in I think they have 16 experts in their platform. And so when you put in a query or a question or solve this problem, it technically should go to that expert in that field. Well, DeepSeek really refined it even more so, which creates a less demand for energy. And I think those are the things that will evolve, Microsoft's Llama, OpenAI, this kind of thing, because I think what these guys said is, why do we need 3 guys on call when we only need 1 guy on call for this? And then and I don't know if any of you have used it, but you see this conversation when you put in your query, this conversation and how the system is thinking. He asked this question, we need to, and its first principles, decision, problem solving. And you see this conversation, and then it comes up with the solution to your question. It's pretty fascinating, honestly, but I think it's something you have to look at and go, this is going to advance this even more because it's going to push these, the American companies to start thinking differently, which is great, which means they're going to spend less money and demand less energy, but they're going to spend that money anyways on something that's going to advance this again. It's just, in my opinion, you just shuffle the money somewhere else because this thing is going to advance so fast.
Yeah, I guess I'd have to look at all the money that they've spent now to get where they are, and then this company comes out, and does this.
But they never would have done this if they
But-
hadn't done that, if OpenAI and all these guys hadn't done
Right,
that.
I understand that. So now at this point, doesn't that put a stake in the ground, say, okay, we need to look at our plans on, do we need to spend and change our plans? Because they've already advanced it to a point where we may not need to spend, or maybe we're spending in the wrong direction. You know,
Right.
and I haven't
That's a
seen
good
that.
point.
I haven't seen that in any of the, maybe you guys have in any of the talk or the, the earnings reports that that's happening yet.
Yeah. I suspect this was like, I listened to a interview with Mark Zuckerberg on the Joe Rogan show, which I think was done 2 weeks ago. And at the last probably 30 minutes of the interview, he brings up DeepSeek and how these guys are advancing because it's been available since December. So this news event this past weekend was sort of like, I think, timed in a way because of the Stargate announcement. But yeah, I think, these guys are aware of what these guys are doing. They have been for a while. I mean, this isn't a surprise to them. I think what surprised them was how fast it was adopted.
Well, and
You
how
know?
good it was.
I think it only
Yeah.
surprised Wall Street.
Probably.
You know what I mean? China's had the product, and we don't know how good we know how their credibility is, right?
Yeah.
And Wall Street panics so fast. So I
Well, they're
mean,
looking for something.
yeah, they're always looking for
Wall Street trades news, and that's what this is. And
Well,
most
yeah.
likely it's misinformation too. Nobody's actually gone in and done a full deep dive into this product.
I
Yeah.
think it just shows how close we are that, valuations are so high and expectations are so high on these companies and this technology that any little blip will cause a Monday,
right. But you could have said that anytime. You could have said that last month. So the proof
No,
is in the valuation.
I did say it. I did say it last night. I've been saying for
no,
6 months. Yeah.
yeah. It comes down to what these companies report. If they have good reporting and they're making money, I look at AA as a big aircraft carrier. And if China comes up with something that shifts direction, so be it. And then you have to maybe adjust your portfolio. But any company that I have has recovered, aside from Nvidia. I see Avco. Maybe 10 companies got hit, and they all recovered. I only see Nvidia like lingering. I don't see any other companies that got hit and haven't fully recovered. Maybe ANET a little bit, but not too many other companies I see are really taken. Except for the big panic, but they recover.
But I don't see him. I don't see him excelling yet. You might
Oh,
see Meta excel. But we'll see. And
I can
put
give
the
you
charts
companies
up.
that excelled.
I'm talking about the Mag 7s. Okay, there's always
Oh, yeah,
companies
yeah.
that excel. But we're driven by the Mag 7s in the bigger picture of the whole market. So we'll look at everyone's companies coming up and.
Yeah, I wouldn't put a lot of stock in the Mag 7s. Meaning money goes there right now, but a year from now, I don't think you're going to have a Mag 7. You're going to have another group of companies that.
I think the implication. I don't disagree with you, Paul. I think the
Yeah.
implication is that it is so much of the market cap of these big indexes, and beyond that, you see all the 401k money and everything that piles in, and all the ETFs and all the funds that are so heavily invested in that if it starts changing and all those things start changing, you're going to see some turbulence in the market.
As always, I mean, you always see the companies that go away in the Dow or the 100 or the 500. You see companies go away, and you see the new kid on the block, and that's what we need to.
I think I see what you're saying, but these companies, these trillion-dollar companies, are so huge. I don't think they're going to go away. Number one, but to shift that market capitalization in those indices or in your fund to other companies, those companies have got to be as good or better, making as much money as these Mag 7s to make it an equilibrium. I can see it shifting over, but it's not going to be able to fill the bucket of these Mag 7s if they all go. You know what I mean? It'll go somewhere, but it's I don't see.
One thing
You go back 2
One
years
thing-
ago, Nvidia wasn't even in the discussions, but all of a sudden they're like the greatest thing since sliced bread. If you go back 5 years ago, 10 years, you could lose a few other companies in the Mag 7. There's going to be one of those Mag 7s that are going to go bye-bye, and then another company is going to come in, and they're going to rotate. It's just for us to be ahead of it.
I think one of the biggest challenges is you've got the money flow every 2 weeks going into these indexes, and these indexes are forced to buy those companies. And if you index your 401k, you're buying the S&P. So every 2 weeks you deposit, your contribution to it. It's matched by your employer. That's a big wall to climb. So, but your
Okay,
point
we gotta
is,
get them on the phone and straighten it out.
There's nothing we can do.
You're on the speaker, Bob.
your point is that, like I was thinking today, I remember when Exxon was the biggest company in the S&P, and that wasn't all that long ago. So it can change. You're absolutely right.
But Exxon wasn't trillions of dollars in market cap.
Right. Well, and that could honestly be contributed to the inflated of money supply into the system in the last 5 years.
Partly, but it's also the Mag 7s. Their earnings were so high,
Yeah.
a lot higher than Exxon ever. Okay.
True. Yeah.
By the
I get
way,
that.
there's one thing you haven't said. What happened at the same time that DeepSeek came
Yep.
out on Sunday? We got TikTok. TikTok has got to be under different ownership in the United States. That's stripping it away from the Chinese.
Haley brought it up today to me. She said we got till March
90 days.
5th or something, 75
Yeah.
days,
90 days.
90 days for this to happen. I guess that's a question of, will that happen?
Don't you think that
How does that affect all
these
this?
announcements come at a very opportune time, as Bob is saying, that, there's pressure on the Chinese with their TikTok, which is definitely has some nefarious aspects to it.
Yeah.
Don't you think that this information out is to protect that position and to create a diversion? You gotta look at a different level at this and not just trading news that comes out that is in the sector that you're looking at. You need to evaluate it from a higher level, in this case, a geopolitical level.
Yeah.
I mean, you want to trade the news, that's one thing, that's very short term. This is more a long-term type thing. As more and more pieces of information come out about this, you're finding that there's investigations in Singapore about the NVIDIA chips and that it is a possibility. Nobody's gone down and actually built this thing and says it works. They're all going on what is being projected into the media, and that's dangerous.
No, that's true. And that's what I said. I don't know what to believe. I'm not skilled enough in AI. That's you guys' idea or your guys' bailiwick and Kerry's for sure. I don't spend that much time on AI, but I know it took a lot of market cap out of some stocks this week.
Yeah. Don't you think that might be an attempt by the Chinese to kind of say, hey, we can hit you in a different way?
No, absolutely.
Yeah.
I don't buy any Chinese. I haven't bought any Chinese stocks, and I won't even put DeepSeek or TikTok on any of my systems because I don't trust them.
You have to take this and evaluate it at multiple levels. It's not just an investment per se or competition to a segment of the market that we're investing in, but
Well, I mean, it's those kind of things. It's those kind of things, Mike, that can trigger that black swan. Because the market is so emotional and so on edge because of these valuations, that it can do what it did on Monday. And we were lucky enough, if you want to call it that. I don't think that all the earnings reports we heard from who we heard were all that great. Okay, But they were enough to, like Paul said, bring back stock prices on a lot of stocks. So
I think that this product coming out from Deep Seek right now is on the autopsy tables of the big seven, and they're going through it with reverse engineering to determine all the facts that have been released, are they indeed correct?
well,
Right down to costs.
that's what Meta's doing.
But you also have to look at who's investing in this company, who gave this startup the $6 million. And everything I'm seeing points directly back to the CCP.
Everything in China is a CCP.
Right.
I
So
would
you have
imagine.
to take it with a grain of salt, whatever they say.
Well, I mean, it
You
was, I
also
think it was,
have to, you also have to take into consideration that Trump is pushing tariffs against the Chinese. They're going to come up with some way to massage their position.
no, I don't disagree. I don't disagree. So
Yeah.
anyway, unless anyone has anything else to say, we'll move on a little bit, then we'll look at some charts. Anyone
I
else want?
just, I just feel that, a lot of people are not, thinking very deep on this and what's required. NVIDIA's chips are still going to be required. So if you're discounting NVIDIA, I think you're making a bad decision on that. Because you just think about all of the FSD as far as Elon, Oracle, what they're putting in place, they're going to need it. This shortcut that they're pulling is never going to be lasting. I think it's just someone dropping a bomb, and there's a lot more to it. You start thinking about artificial intelligence and robots and what's going to be required. I think you're going to be surprised when NVIDIA comes out with their earnings.
I think that'll be the key.
Right.
Yeah.
And if you're short thinking it that, DeepSeek really has found something that no one else found, I'm sure you're dealing with a lot of smart guys. I don't know. I'm staying on my road. I think that I haven't changed my investments. The day it fell apart, I said I'm sticking with it. That this is just a down point, and there's just too many big companies doing it, and they're not just going to make decisions like that are disastrous to their company.
Hey, Bob, what are some of the companies that got affected that you're invested in?
Well, NVIDIA, obviously, Oracle
Yeah.
got affected, but it mostly came back. Oracle, they're putting in all NVIDIA's chips. I'm heavily invested into Oracle. A few of the other ones.
Do you have a Arista or any of the energy stocks?
No, I haven't
Okay.
gone to energy yet because I think it's too soon.
Okay.
I don't feel that Palantir, I'm heavily invested in.
That didn't get hit much. I think it was down 6% or that day.
And it's up today because
No, I meant on Monday.
yeah,
On the day that didn't get hit.
yeah, Oracle took a big hit, so did
Yep.
NVIDIA, and I just stayed tight with those. I don't select a lot of stocks. I try to keep my portfolio tight on things I believe in and where they're going to go. I find I get the best because when you spread too far, I mean, a lot of people talk about diversifying. Okay, fine. I mean, I have Netflix and a few other things, but I find when I diversify too far, it's just too much to follow and too much to stay on top of.
It's a lot of work.
Keep it
Definitely is.
sweet.
I've had about 8 stocks that got slammed, and all of them are back, if not higher, and 3 are still lower. And I've been adding to the ones along.
So what I'll say to you that eight stocks is too many for me.
No, I understand that. My point is anything that got hit aside from Nvidia has recovered or and since Monday and is not, if not higher.
except Microsoft.
Oh, I got your,
Well, Microsoft, if you look at that chart, it's a sucky shop. It's not a great company to be in. It's probably one of the lowest. That's one of the ones I think that are going to be leaving shortly. But I'm talking about other plays that pin action off the whole AI or things that went down on that day. They all recovered. That's my point. Only. I was just curious if anyone else was feeling that. I felt it. Anybody else feel, geez, oh, I got slammed. A lot of people sold on Monday.
right. Once they sold, they realized the loss.
Yeah, so like if we sold Oracle, we'd be pissed because it's already come back.
Exactly.
You
And
know,
that
so
was my point
yeah.
when we were talking the other day, is I just feel that too many smart people are totally behind NVIDIA, and I just don't see this flip happening because DeepSeek supposedly and allegedly has figured it out. I
Well,
mean,
you
okay,
think about this. If somebody out of China came out with a chip that was competitive and cheaper and better than NVIDIA,
and there'd be a problem.
that would be an issue.
I agree with you.
But they're
that's
working
not
on
the
that though.
case.
I mean, they're working
Mhm.
on it.
Sure
Well,
they
sure
are.
they are.
But
And it
that,
will
That
come
is
out
working with
eventually.
Broadcom.
that's not what
Yeah.
occurred. What occurred that they came out with a chat GPT? What use case does that work for us? There's a speculation that perhaps that they have a product that can calculate at less cost. That's what China's saying that has zero credibility in my book. So I'm like, okay, the market sells off because they're not, you know, they're going to say they made it for this low cost and its performance is this. But I'm like, yeah, but what use case is that used in?
Right.
Well, that's how
I think
touchy the market has been,
Exactly.
especially with
Yeah.
those high valuations. You know, that they're just waiting for something to trigger, and then once it triggers, then the algorithms go in, the computer starts selling until they go down far enough to trigger back up. You know, and they wipe out and rug pull, you know, a lot of the retail guys.
Yeah.
So, all right, I'm going to move on a little bit. Unless you guys have anything else, I'm good with talking about this. We can go back to it. We'll go look at the charts here in a minute. And
I'll mention that there's plenty of other places to make money in the market right now. I mean, we're
absolutely,
talking AI, but there's so many other companies that are hitting all times high and doing very, very well. So
no, I agree.
yeah.
So money moves to where the value is. So this was a big thing. It moved the market. It was big. You know, a lot of market cap, a lot of money was lost this week. So that's why we talk about it.
There's always places to make money, and there's always places to lose money.
Yeah, we want
Yep. Hopefully we're not losing money. I'm gonna go on. I'm gonna move on to kind of the other story that I saw this week, and that goes back into crypto and Bitcoin, and along with Tesla's earnings, Tesla holds Bitcoin, and its quarterly results, Bitcoin boosted its net income. It got $600 million mark to market benefit from owning Bitcoin. Okay. Due to the adoption of the accounting approach, they just changed the accounting procedures. And they said that on the earnings call. So I'm just wondering how much, you know, people and companies see that and say, wow, they just got a $600 million net income off owning this in their treasury, as opposed to a Berkshire Hathaway that owns $326 billion of treasuries making 4%. So that was interesting. Adoption, Texas Lieutenant Governor announced the state's 2025 legislative priorities on January 29th. They include a proposal to establish a Texas Bitcoin reserve. Texas joins at least 5 other states in the U.S. where legislatures are working on Bitcoin reserves or crypto reserves, including Arizona and Utah, where strategic reserve bills have advanced out of committees. Indiana authored a bill that would allow retirement funds to invest in certain Bitcoin exchange traded funds. The bill included public pension funds held by state officers, state teachers' retirement, and the public employees' retirement fund. So this is specifically to ETFs like the IBIT that we talk about and the other 13 that are US based. So again, adoption to ETFs and the Bitcoin are growing. South Dakota is expected to begin debating a bill that seeks to add Bitcoin to its financial reserves, a move that would officially recognize the crypto as a part of the state's assets. Arizona Senate Finance Committee approved a bill that could make the state the first in the U.S. to allocate public funds to Bitcoin investments. So I've seen adoption in the states go, and we'll see if the U.S. goes. I saw the different countries are also looking into it. Also this week, the U.S. Securities, and this goes with kind of what Powell said this week. The U.S. Securities and Exchange Commission has officially rescinded SAB 121. It's a controversial rule that have long hindered banks from offering Bitcoin and crypto custody services. This move, announced on Thursday, signals a significant shift in the SEC's approach to regulating Bitcoin and crypto and paves the way for greater financial integration. So banks right now, with the removal of SAB 121, major banks are now expected to move quickly to integrate Bitcoin and crypto custody services into their offerings. This is a significant milestone in the financialization of Bitcoin and bring it closer to mainstream adoption. Fed Chair Jerome Powell said cryptocurrency confirmed that banks can still work with crypto customers if they manage the risk properly. Banks are perfectly able to serve crypto customers as long as they understand, can manage the risk, and it's safe and sound. Threshold has been a little higher for banks engaging in crypto activities, and that's because they were so new. The Czech National Bank could be the first Western central bank known to allocate a portion of its reserves to Bitcoin. They're breaking from traditional financial dogma plans to present a bold proposal this week to its board to invest billions of euros in the digital asset, according to the Financial Times. Japanese investment firm Metaplanet announced plans to raise 116 billion yen or $475 million to buy additional Bitcoin. Tokyo listed company intends to issue 21 million shares at 0% discount warrants. So they're kind of following the MicroStrategy plan as far as Bitcoin. So if you look at it, Bitcoin did the same thing. It dumped down to below 100, on Monday. And currently, I think it's back up around 105, 106. And so I guess I look at it again, and I own it. I own some of the companies that are in it, such as MicroStrategy, and I own the ETFs. And it's still 21 million Bitcoin out there, and a lot of demand I see. So I see it being more and more of an accepted asset class and an opportunity for potential. With you see BlackRock, Larry Fink said people are used to asking, should I put 1% to 2%? Now they're asking, should I put 5% to 7% of my portfolio into it? So as it grows, gets bigger, more confidence, we got more regulation coming. I think you're going to see the asset class get bigger and bigger, in my opinion. So that's all I got on that. Okay. Anyone else have anything on any cryptos or anything that you're concerned with?
The ones that are in the platinum portfolio that everybody contributed to are doing pretty well.
Pull that up.
All
Pull that up.
right.
We'll take a look at it.
Give me a second here. Share. Right. Let me know when you can see it.
There it is.
Yeah, so Scott's kicking butt with OPFI, OPFI. He's up 34.81% since the 10th of January. Manny's got Ripple in there at 23%. Syra, I think I pronounced that right. Solana at 20%. Paul at Palantir. Reddit is Esther at 18. Paul again at Spotify at 17. Good job, Paul. David with CrowdStrike at 14.24. Manny at 10.51. That's a crypto. Myself with Meta 11.57. Mark with Bitcoin or IBIT at 9.48. And then Bitcoin again at 9.24. And then so on. Here's the one I was really impressed with. Walmart up 5.48. This is this is in a world of technology and AI. here's a steady Eddie, just keeps growing. Gotta
People
have
still
it.
gotta eat. People gotta eat.
Gotta
Great
eat.
chart. Great
Yeah,
chart.
you got, yeah. Micron is at the bottom of the list. It's 6.22, but that can, a lot of that probably is effect of the NIVIT, the chip effect or DeepSeek effect. Iris Energy is down since we put it on at 3.87. Urban Outfitters, my kids haven't started spending money yet, so hopefully they'll start kicking in here soon. And then Microsoft just right at almost break even. Um, yeah, so I mean it looks good. I mean things are moving in the right direction. I like Mike with his what is that? Starts with a C. Opposite of what the market's doing. Contrarian approach with um silver, as well as physical gold. And he had one other in here. And then gold explorers, he's up 7.24. So honestly, to me, the diversity of this portfolio is it's creating a nice low return year to date at 7.63% since the 10th. I think we're, Mark's Berkshire, to me, that is the sort of level-headedness of economies. It takes in everything. So I don't know. I think we should all be, definitely have a drink after the day's work and be happy that we've got something pretty cool going here.
That is cool. Yep, definitely.
Yeah. Yeah.
Cool.
Any comments, anything? All righty.
Okay, let's move on.
I did want to comment on the economy when
Go ahead.
on.
Go ahead, Bob.
So it's very interesting what Trump is doing, and I don't know if many of you figured it out, but Mark, if you recall, a lot of our job creation came from government jobs
Definitely.
and healthcare and some service, but most of it is healthcare and government. So the thinking here, what he's going to do to pressure Powell to lower interest rates, is the process that he started already, which he's firing, getting rid of government workers, putting a freeze on hiring government workers, thus putting more people on unemployment, which unemployment expect down the road in about 3 months to start to explode. Healthcare, because of the migrants, are all going to be pushed back. Healthcare is not going to be, or the workforce that they have to deal with all the immigrants is going to reduce substantially over time. And what you're going to have is a very high unemployment rate. All the Metas, Google, they're all laying people off, streamlining their workforces. So there's going to be a big issue coming up down the road with unemployment numbers being very high, which is then going to force the Fed to reduce interest rates. And that's probably going to be somewhere between 3 to 6 months down the road. You're going to start to see that. So it's very creative on what he means by when the time is right, I will have a conversation with Powell. That's quote unquote. And that's where he's working. That's where he's working up to that. That's the way I see it as a business person who runs business and where he's heading with this. So, and with that, Powell, because you're going to see fluctuations in the stock market, be ready for that, because as unemployment goes up, people are not going to be able to pay their bills. They're going to have issues. So, that's what I see as far as the economy goes. And to be very honest with you, the economy still sucks. It's not in good shape. For some, it's good, others, it's bad. Um, Businesses, if you just listen to what's happening out there, small businesses are hurting and struggling. I'm seeing a lot more stores that are empty out on the street. If you go to the main streets and to the malls and whatever, uh, there's a lot of play and warehousing. Warehousing around New Jersey has become available. We had a big issue 2 years ago with warehousing. The price per square foot was heading up to the $20 a square foot for industrial warehousing. It's dropped down to 15 now.
Wow.
So things are not so rosy as everybody may think. Yeah, uh, in the AI and technology, yeah, it's rosy. It's nice and fat. But if you look around outside of that, food's still very expensive. Everything is expensive. My kids just got a couple of places, and it's like it's crazy. I don't know how millennials can afford and how they're affording um, to live. It's even
I
if
think
you
it's
have
on
a six
credit,
figure
Bob.
income.
I think it's on credit.
Yeah. So I just wanted to put that out there where I feel that Trump is going with this total layoff and freeze on hiring. Um, that's what I see is developing for him to force Powell's hand.
That's an interesting, that's an interesting theory I haven't thought about. Um, I do think he believes that the federal government is overstaffed, compared to what a business would be. And I think that's part of it too. I have one question for you, Bob. I used to have an office in Jersey City. Looked right over the Hudson towards Manhattan. And now I understand, after 9/11, when I was there were only a few offices over there. Now it's huge over there on that side. A lot of office buildings moved over, companies. What is the occupancy in New Jersey on those office buildings?
So believe it or not, they're all getting forced to come back to the office buildings because,
Okay.
and the reason why they want employees to come back because instead of eating at home, they want them to be eating in the office so they keep the businesses that operate around those office areas, Jersey City, Hoboken. Hoboken is, if you remember Jersey City and you used to go there,
Yep.
Hoboken is booming like crazy. There's cranes in the air
Yeah.
everywhere. Um, they're building buildings there like crazy. But I I I don't know what the occupancy rate is, but I do know that they're forcing them back to the offices now. I don't know if you heard Jamie Dimon. He came out and said that Chase is now requiring their employees to come back 5 days a week in the office. So uh, they're they're putting down their foot because you know what? They don't need everybody anymore, you know, and it gives them a reason to fire you, and that's
Yeah.
what's starting to happen.
Okay.
I saw this interview with it was, I forget the name of the tech company, but he said we're on average we lose 20% of our employees a year just because they move jobs or they go elsewhere. And he says, and we quit hiring probably about 6 to 12 months ago. He says what's happening though is that money, not hiring, that 20% just leaves just out of, they move, they change jobs, this, that, and the other. His employee base recognizes that now with artificial intelligence, they're implementing different tools and services that's allowing them not to hire, that these employees are now getting paid more. So I think, could see a income increase with those who are working, and that could be one of the benefits of artificial intelligence going down the road. The problem is then you've got, 5, 6, 7, 8%, 9% unemployment because now you don't need these people. And I think that is one of the biggest things that we will see. We'll see at some point. I would not be surprised if we see double-digit unemployment in this country in the next 6 years.
I think if you
Because we
look-
don't
I think
need
it's
I think
too
if you
far
look at,
out. It's
if you look
sooner.
at the U6, we probably already there.
Yeah.
So, Trent,
I agree with Bob, 6 months. You're gonna see a
What's
spike.
that?
6
6
months, you'll see a spike in unemployment.
yeah,
What you need to do is take a step back and look at Argentina. What has Melli done in Argentina? What is Trump doing? Trump's using the voice to get what he wants.
once, exactly.
How is he doing it?
He's using his threats.
Exactly. Don't forget, tomorrow, 25% tariff on Canada, 25% tariff on Mexico, 10% tariff on China. This guy's a bowling ball in a China shop, and this is what he wants to do. And if you continue to think that you can trade the news on the short term, you're going to lose your shirt. You got to start thinking out 3 months because things are going to get crazy.
Mike, is that on all products?
Everything from what I understand.
That's
I
across the-
think
wow.
what I saw was gas or like gas, no, excuse me,
Energy.
oil, energy. There's a good chance it'll be excluded.
Yeah, well, I hope so because the Northeast
Yeah.
gets like 90% of its electricity from Quebec. That's
wow.
a big problem. Major problem.
Oh,
Nobody's
that would
talking
be.
about this in the media. These things go under the carpet because it doesn't affect the short-term trading news. Although the short-term trading news is blind to this, that is a problem that you need one spark to create a meatball going down the hill that's not going to collect anything. It's going to bowl you over. You
Right.
got to be really careful. As Bob says, he sees it from the bottom line of what's going on the thing. I'll give you an example based upon what Bob was saying. My son last night, we were going to have burgers. And he's like, no, Dad, I had a burger for dinner or for lunch. He's got a good job. He goes, you know how much it cost me? I said, no. What'd you do? Go to like a counter type place? He's like, yeah. It was like, $16. It's like, no, higher. Burger, fries, and Coke cost him $22 for lunch.
It's got to go to the value meal.
Welcome to my world.
This still costs you $15.
His son's probably not
It's
old
crazy.
like you and
I
I,
agree.
Paul. We don't get the blue plate special. He doesn't get it. I hear what you're saying, and we talked about that. It's that Powell kept saying in his FOMC presser that inflation's gone down. It hasn't. Okay, the rate might have gone down, but the inflation has not. And the PCE today showed that it hasn't gone down. It's actually going up.
And Powell is no longer independent.
Oh no.
It hasn't been independent since Yellen. Once Yellen jumped ship and became the Treasury, anything that the Fed does is political. Powell is a political beast. What did he say even before Trump came out? I'm not going to do anything to help that guy, is the bottom line. That's a problem. The Fed is supposed to be independent.
No, unfortunately, the Fed is run by the big banks, and that's why, I think it was political way back in the great financial crisis when they bailed out all the banks,
Yep,
and
they
no one went to
shouldn't have.
jail for that.
They shouldn't have. Who was the Fed chair then? That guy couldn't get out of a wet paper bag.
It was Bernanke, wasn't it?
Bernanke.
Bernanke,
Yeah.
that guy couldn't get out of a wet paper bag. He couldn't even explain it on a lower level. He had to talk at this high level that when you started looking into it, you're like, dude, you just did a complete circle and said nothing.
Sounds like Powell to me.
And that's what Powell does. The Fed has
Yeah.
got two tools, what they say and interest rates.
That's it.
And he's blown his load. They're
No,
not
I've-
going to raise rates. They're going to have to raise rates because you have too much liquidity in the marketplace. There ain't going to be no cuts.
Well, they know that inflation's going up, but they continue to say it's not, and it's under
Yeah.
control, and it's not. Okay.
Well, it
So-
was what, 5 years ago, it was 2% was the target, under 2%. Now all of a sudden the target is 4%. I mean, every point up is an attack on your buying power. So your buying power continues to decrease.
I agree. And that's what we were saying, their purchasing power, they increase the monetary supply on average 7% a year. And then you've got the, inflation on top of that. So, if you're not making 10, 12%, you're probably losing money every year just because of the monetary squeeze and losing money on purchasing power. So
Let me ask this question. This week I drove to Houston to deliver one of Ginger's paintings to somebody who bought it. They spent $6,000 on this painting, and I brought it in. I was like, "Do you want me to unwrap it?" And she goes, "No, we're building a new house. I have a wall for this paint. It's like a 79-inch by 48-inch painting. It's big." And I'm like, "Oh, you're building a new house?" And she goes, "Yeah, we bought like 20 acres of land just outside of Houston. We're building a sizable house for the two of us." And I walked away and I was like thinking, they have no idea what's going on, like financially. It's not affecting them. It's not affecting, they're probably in the top 10% economically. And a couple of other people I ended up making deliveries to, same thing. And I got to thinking, I'm like, when do they get affected? At what point do they feel the pain, that top 10% income earners in the country? And will that, they're the ones saying the economy's good,
I can tell you when,
not the
I
guy
can, I
flipping
can tell,
burgers at McDonald's.
I can tell you when, Trent. I can tell you exactly when. When they stop
When?
buying pictures from Ginger, that's $6,000.
Yep.
Well, I hope that doesn't stop.
See, yeah, be careful what you're wishing for there.
Yeah.
I know. I didn't say I wanted it to stop. I just wanted to know what is going to be the pressure point. And was that pressure, have we seen that pressure point in the last 25 years?
I think in the last 25 years, you've seen a big separation between the haves and the have-nots.
Yep.
Okay.
Yeah.
And, income inequality and all that is an issue in this country, as it is around the world. Okay.
What you're saying, Trent, is a direct factor of how the Fed has managed the money supply. There's too much money supply out there. When the supply starts drying up, that's going to spiral out. It's going to raise rates because now you're going to have more people going to borrow, and there's going to be less money to borrow. It's a classic case of supply and demand. It's going to shoot rates up. You're going to see, I hate to say this, but you see more and more of this of like the late 70s. And the inflation that's going to come from this. Again, I said this last week, you have to look at the 7 trillion in short-term debt that's out there. That can't continue. Rotating that over and over and over, that's a time bomb. And that's going to have to come down.
Especially if the interest rates going up.
Yeah. Yeah, and it's taken what, 25% of the federal budget, which is how much? I mean, last I heard, it was like over 4 billion. I'm sure it's like 6 billion, trillion, excuse me, because I stopped paying attention because these people were like drunken sailors.
Well, I think it goes back. I think it goes back to, until people feel the pinch, they don't care. Just keep going, and we don't care. But now you're seeing people feel the pinch, at least on the lower levels of the economy scale, and even the mid levels of the economy scale. So sorry, Bob, you were going to talk.
I mean, Mike brings up a very good point. One is we've spoken about the 7 trillion that cost 590 million, to service, right? I just think that everybody is starting to feel the pain because if you go back to M2 money, there is people don't have any money. These holidays, they just rang up their credit cards, and the credit cards are all out of control. All these numbers are going up as far as delinquencies, um, across the board. Look at the car industry. Um, it's not in great shape. There's a lot of industries that they're trying. What amazes me is no one really speaks out how bad it really is. They're all trying to put on this facade that things are great and everything is good, when the fact of the matter is it's not. It's This is a horrible economy. And I know because I sell the parts that go into their products. And if we're slow, we're the first to see the uptick and we're the first to see the downtick. So
You know,
it's not happening.
Bob, they don't want to. They don't want you on CNBC because what you just said would be have the same effect times 10 that DeepSeek had on Nvidia.
Exactly.
They don't want that because these guys lose money. You
Mhm.
know, these asset managers, these mutual fund companies, Fidelity doesn't want you on CNBC, and that's why this is not happening. That's
Right.
why we haven't heard that big event that draws us down yet. Because you're right, it is happening, but they're covering it up.
Right. Absolutely.
Yeah,
And it's very frustrating because if we're all going to cover it up, then we're not really dealing with the problem. And I do
right.
believe that Trump is dealing with the issue, but it's going to take time because we're so deep. It's like
Yeah.
you dug this hole that used to be 6 feet deep. Now it's 25 feet deep.
And full of
Other than
water,
that, they put some cement on top of you.
and yeah, water underneath it, yeah.
Yeah, that's it for sure. The cement on top of it at
Yeah.
6 foot deep with rebar.
Exactly.
Yeah.
And you're
Bob,
chipping away at it, trying to get out, but
yeah,
then they come back with a new wheelbarrow for you.
Bob, answer me this, just from, you've obviously been doing this business for a long time and seen the back ends. Have you seen this type of drawback in the lines of productions before? I mean,
Yeah, I
you've
have.
been doing this for 30 years, right?
I'm doing this for a long time.
So you
And
were obviously in the cycles.
and I've been through many cycles already. And right now we're back to 2009. 2000, actually in 2006 is when it really started, uh, the Great Recession. But 2009 was the big hit.
So you think
Or
you're
are
at
we
the
at
big
the
hit? You're at the big hit right now?
Yeah,
are
Really?
you in February of the big hit, or are you in May of the big hit
I think we're in
of
May.
09? Huh?
I'm in May. I'm in May. It's
So we're
really, really crazy. I expected to start seeing our business start to up. It's not happening. It's
So
everybody's sitting tight.
Bob, did you have to let anyone go yet? I know you were saying you try not to let anyone go.
I've let a few people go. I've cut my payroll already. Not that I wanted to do it, but it's not so bad. Um, I when I have good people that work for me, I'll do everything I can, not to let them go. Um,
That that's when you know it's bad because most business owners, the last thing they'll do is cut people.
yeah, yeah. And we cut our own payrolls and everything, unfortunately, but it is what it is. I've been through this before, but I'm just telling everybody, you guys haven't seen the hard bowl yet, and it's coming.
I've seen it. I've seen it here in farm country, as we're getting to the time people are going to start putting their fertilizer on their nitrogen. They're going to start buying seed, and all that and fuel. And talking to my compadres around here, it's pricey, and the price of commodities, corn, soybeans, all that, they're just not getting it back out on the other end right now.
Yeah,
So
and they're struggling, right?
they are. Yeah,
Yeah.
unless you have a big operation,
Yeah.
it's tough to do.
You know,
And
that's kind
these guys are very, very technologically, my friends. I mean, everything is technology and everything is, their tractors can drive themselves and they do everything with very minimal field work anymore, other than,
As long as they can pay for them, Mark.
yeah, they have, and everything goes in the computer and it goes into the main computer. They can look at every field that they look at. My good friend, he has 5,000 plus acres, and he can look and see where where they don't need to fertilize because the soil is good, and where they need to. So it's not like they blanket fertilize everything anymore. They just go where it's needed. He has moisture meters everywhere, so they know where they need to water and not. I mean,
Mhm.
so it's not blanket watering anymore.
Right.
It's pretty high tech, and
Yeah.
they're still having issues trying to make it work.
Yeah.
this is something that I'm seeing over the past 5 years is that you're seeing a squeeze on the middleman like a Bob here.
Yep.
You, the economy is set to squeeze the middle to increase the large. And that's a fundamental problem across the board. You got a market that's trading on news where the substance behind it is scant. That's a recipe for problems.
Well, I'll tell you, Mike, it's true what you're saying, because if you look at, I was asked from one of the viewers here, what are my biggest line items, in my expenses. And I would tell you that every year, one thing that squeezes me is technology, because I'm big on technology, but it costs a lot of money, technology.
Sure.
At the end of every year, like I just did, I just bought, 25 Dell desktops. I bought another 5 or 10, laptops, because they they're commodities to me that they just go bad, and you end up replacing them. But my point is technology is very expensive, and that trickles up, if you get what I'm saying to you. All the money I'm spending on technology softwares, the oracles, accounting software, all this stuff trickles up to the billionaires.
Yep.
I'm just saying, which comes out of my pocket.
And it puts a financial pressure on you, on your balance sheet.
Exactly.
I'm sure they appreciate it though, Bob.
They don't show up at my office.
I think I think one of the things, kind of following up on Mike, that I've seen over several years is just the reports that I'm getting out of Department of Labor, Department of Economic Statistics, you name it, are crap. And we dig into them all the time here, and that CNBC, like Trent says, they'll grab the headline
They
and
used the wrong word, Mark. They're lies.
well, I'll try to be nice. I guess misinformation is what we should be saying these days, but they are. And I'm like, and then on top of that, we've got the Fed comes out and say, well, they're data driven. They use these reports. And I'm like, well, garbage in, garbage out. And I think that's where we're seeing a real big problem right now is, and like Mike was saying, we're so news dependent. So a report comes out and it's totally bogus or bad, like a labor report where you look into the depth and all the new jobs created are part-time, okay, or government jobs, but they don't go into that depth. And so then the Fed makes a decision based on that because the labor market's good. But then, like you say, Bob, out in the real world, it's not.
It's not good. It's not.
It's like the conversation I had with a buddy of mine in 06. He's a mortgage guy. He was with a regional mortgage lender in Birmingham, and we got pretty blitzed. And he's like, "Can you believe I'm about to make $2 million this year selling mortgages?" And I'm like,
That
my
sounds
mouth
like
dropped.
2006, 2005.
It was 2000.
It sounds like the guy in The Big Short. It sounds like that
Yeah,
kid
The
in
Big Short. Exactly,
Yeah.
right? And they're all going to all these offices trying to figure out what's really going on, you know?
He said to me, I was like, well, I was like, dude, how much should you be making? He goes, I'm really good at what I do. I should be making 300K a year. That's what I should be making. He said he goes, we don't even barely ask for proof of income or anything now. He goes, this thing's gonna blow up. And I look at this and I go, fast forward to today, and I think to myself, Jensen hasn't bought any stock.
They sold it.
These guys aren't buying stock. Warren's sitting on 300 billion. Nobody's talking about that.
They're
Well,
waiting.
we are.
Well,
They're
yeah.
waiting. They're just
waiting.
waiting.
They're waiting for the collapse.
Yeah, and I think when you look at things like this and you evaluate markets, if you're a short-term trader, volatility is your friend, and we've got volatility happening. You know, we see that, that's great. But if you're a intermediate to long-term trader, or investor, trader, whatever you want to call it, you got to look at these mechanics, these conversations, because you think about it, markets don't collapse from the top, they collapse from the bottom. And what you're talking about, Bob, is you're in the middle. You're in the middle, and that bottom end is starting to collapse. And I think it's just a matter of time.
No, I feel it has collapsed.
I mean,
it's collapsed. I mean, I've had a few people in here already asking me what are my projections for the year, and I'm telling them flat. And if I get away with flat, I'm gonna be happy.
Yeah.
Yeah. I started re-listening to if you guys are familiar with Jesse Livermore, he was a early 1900s trader, very
He's called the world's greatest trader.
Yeah. It's what's the name of the book again?
I can't remember, but
Hold on a second, I'll tell you.
I've read it.
What's the name of it? What's the name of this?
Remnants of a Stock Trader. It's about Jesse Livermore. And Jesse Livermore lost and gained all throughout his life, and he learned a lot of good things. But he actually, after the 1929 market crash, it was publicized. I think it was the New York Times, or said, the headline says Livermore crashes world markets. And he had shorted world markets in a very big way back then because he saw what was happening. And I think that it's a good book for everybody to, no matter what kind of investor you are, it's a great book because there's a lot you can pull away from in that is relatable today and how you go about investing. But yeah, I'll see if before we get off, I'll see if I can put a link to it.
He's one of my favorite. I mean,
Edwin?
Jesse Livermore. He's one of my favorite traders. I mean, he's considered the world's greatest trader. He's influenced my thought process for sure on trading, for sure. So it's worth looking at.
Yep.
Okay.
Okay, everybody gonna sell all their stocks now. Dump it.
No, I think it's just that's not the point. The point is to pay attention.
Yeah.
Be on top of it, because
I think even if you're a long-term
don't go
investor,
playing your guitar, Paul, and disappearing.
I mean, even if all you use is Paul Tudor Jones and look at the 200, and as an investment to get in or out, could save you, 30% on the downside, So technicals do matter.
Does anybody have any good stock ideas for this week that they ran across?
I want to go over something real quick because we're running out of time, and this is you guys' time, but I want to go over kind of real quick every week.
Guy like Julian over there, the young guy over there, don't invest. Don't listen to us old guys.
Every week, on the weekend, I'll put out a couple charts of interest. One's the momentum charts, okay? And with what you can see in some commentary and some of the risks that are involved in that, I'll throw the charts in there. And then I do under the 200-day SMA charts, and I'll list those out. And this is every weekend. So, and you can see I put the charts at the beginning of the week. And then, you know, I don't really track them all that much, but when we go look at them for this week, you know, I do watch them myself, and I would utilize my trading plan on some of these. But like we had on the under 200, we had IPG. You can see here's what went on the list, and we're up. We're, you know, could have went out, got out at, you know, any of the resistance levels. We're having some resistance at the 50, but it's up, and you've got, you know, you've got the oscillators there. You've got, this was on the list, Yum. Okay, Yum came on the list here, and it's up. It's below the 200, and you got to be careful and go through the, you know, the verbiage that I put in there. But again, these are lists that we put out every week. I try to put at least 10 on. Here's Advanced Auto Parts. Okay, we got in at 48, 44, and it's just right at it right now. So again, you can see it traded right along its upper Bollinger Band. You could have gotten out at that, or, you know, again, these are under the 200. And we look at Estee Lauder was on the list. Estee Lauder's done a nice run, and we got on, this was actually put on 2 weeks ago, and it just kept running, again, under the 200. And then we have some from the momentum list, okay, which are what Paul likes to trade more, like the FC. So this came on the list here, and, you know, it's right back down. It came up, earnings got in. Of course, I would get out before earnings on my trading plan. It's, you know, follow your trading plan. DKS, Dick's Sporting Goods, was on. You can see that with these momentum stocks, you got to watch, because when we put them on the list, we don't have this intermediate resistance level up here. And so you want to make sure that'll pop on, and you got to watch it on these momentum stocks. You can see what happened with Dick's. It didn't get past it. It hit it several times, and now we're heading down. So you got to be careful on these momentum stocks when you fight the resistance.
It's amazing
Abbott
how a
Labs.
company like Dick's can do so well. That's amazing.
Abbott did the same thing. We put it on. This was the day I put on. It went up, and then this day the intermediate resistance level came on. And if you got out, you made money. If you didn't, you're still making money. But you see how this resistance, just once it hits, 90% of the time, it just can't get past it. Again, these are on the momentum list. These are a little bit faster. You got to watch them a lot closer. Here was John Deere. You know, put it on the list here. It went up. Then the intermediate resistance level came on. You could have got out here. That's where I always get out on. So you would have made a little bit of money. If you didn't, you're down a little bit, and you're seeing the 9 coming up and going to start squeezing a little bit here. So I just wanted to show you guys, we put that every week. I wanted you to be aware of it. I don't know if everyone's aware of it. And then we'll put out some lists and smaller numbers, just stocks that we'll look at that meet the trading plan, with some commentary too. So make sure you go in and look at these. I'm not saying you have to trade them, but, you know, we can find some on 2 different kinds of lists depending on your risk style. And that's, you know, that's what you guys are paying for, is to get some of these on the list. So anyway, Paul, if you want to go, you want look at any, Paul, before we go? I know we're kind of stuck on time, but
There's nothing
let's go
this
to-
week that really caught my eye.
it's a tough week, isn't it?
Well, I've been adding to the ones that got slammed. It was like
Yeah.
managed control on Monday. A bunch of them got slammed, and they just retraced. GEV was one of them. VRT, VST, CLS. Man, that really cranked.
Take care, guys.
All right, see you,
Later,
Bob.
Care, Bob.
I wanted to look at the video real quick, and I was saying, you know, when it got slammed, you know, here was Monday, went down under the 200. At that time, I said there's going to be 2 scenarios. It either comes up, hits the 200 and down, or it comes up, and then retest the 200, and that's what it did. So here we are, we retested the 200, and today or yesterday they bounced off. We're still above the 200, but again, we're not seeing much strength down here in the oscillators, and we could be seeing this battle at the 200 go on for a
You
while. And we're
need,
starting to
you need
see.
at least another test before.
Yeah, I mean it's not even close to where I'd even enter on the short-term swing trade on Nvidia right now. It
Yeah.
hasn't shown me anything. So
It's
I
definitely
think they
been
report on
struggling.
the 28th. The
that's
28th or 26th?
February, right? February.
Yeah, February
Yeah.
28th. It's
We
the
got a
Tuesday.
month. Yeah, we got a month. Yeah.
Yeah.
So and you look at the others like Meta.
All right, guys, take care.
See you
All right,
later,
Bob. Thank you.
Bob.
We'll see you at 3, Bob. Again, here's Meta. Meta is on the momentum. No upper resistance other than we found some resistance here where the sell orders are. You can see still following up on the Bollinger Band. But again, sell order line is a pretty good line of resistance also. Apple. Nope.
Poor Apple. Scott, you hanging in there?
There's Apple. So kind of got a run slam here. Okay, went up, got past kind of the resistance level, and now we've come back down to the 20. Again, I don't know. I haven't watched the news today. What happened with Apple, Paul?
They
Other
beat
than-
earnings. Well, I don't know if they beat.
They
They had
did. They
good news.
beat.
Yeah.
Their iPhones were down sales, but they beat earnings. Yeah.
I think there's.
But I don't know what happened. I don't know what happened today because look, it
Oh.
opened up. It opened up way high. This is where it opened. It opened at 247.19, and now we're sitting at 234.50. So you got to watch these earnings. Earnings are strange characters, man. You can make you look like a hero, or it can make you look like a zero. So I always try to get out before earnings because of things like that. Let's look at Tesla. They had earnings this week. Yeah,
They were up pre-market and they missed. It was kind of.
Tesla's been 20 some days just heading along right where the resistance level is, and then right above it just are where the cells are. And we've just had 21 days, and you can look at the Bollingers, and it's really not just moving anywhere. And even after earnings, we just have this tight range on Tesla. So trading wise, this is not something I'd be interested in. Long-term wise, you go back out, look at a weekly chart. Let me give it a little more. And, even on the weekly chart, we're seeing that we're hitting resistance week after week after week. Let's look at the monthly chart. And even on the monthly chart, we're hitting some resistance. Last month we wicked up and hit where the cells are, but we're just having some troubles even on the longer term here on Tesla. So that's the way you can use these charts, even on a longer term, for investment styles. You can look at Paul Tudor Jones, and Tudor Jones will say, as long as you're over the 200, on an investment, you're fine. Let's go out 5 years and see what Tesla's done. He would say, you get in here when it crosses, you hold it, you get out under the 200, then you get back in. And he said, you get out there, you get back in, and that's how he got through the great financial crisis. You get out here, you miss all this crap, and get back in here. That's the simplest strategy that I know of for a long-term investor to keep yourself from getting hammered, when the downturn comes, or if it comes. So, Paul, you were saying GEV. I was trying to remember some of the stuff you were talking about.
GEV took.
GEV.
Yeah, they haven't lost purchase orders, and there's such a backlog on their turbines. So I bought. I kept on buying every day.
You even bought after you usually watch the MACD pretty well.
Well, I know the company a little bit,
Yeah. It's a long term. But you did get a crossover here on the stochastic, which is usually an indicator that you're probably going to see it on the MACD in a couple of days. So
yeah, I don't sweat that company.
Nope, cool. Well, it's quarter after, guys, and we've had a lot of discussion. And I appreciate everyone's talking. Sometimes we just talk about things that need to be talked about and instilled in. I know we're kind of a technical analysis investment type channel, but it's your channel to talk about and really good discussion today. And I appreciate everyone being here.
Yeah,
Trent,
I
do
want
you
to
have
know,
anything?
is
Go
there
ahead.
anyone that has any conviction on any stocks this week at all? Is any at all?
I have an idea. Nvidia will make a move to 130, and they'll make a move to 110. And it'll do it all before earnings.
That's
So
a
if you
tough
have a
stock
way
to
to,
own. The problem
Huh?
with that Nvidia is there's so many other stocks, easier stocks to own than that. It's just
Yeah, I agree with you, Paul. It's a
yeah,
tough one.
it's sort of like Apple. I mean, I rather throw money in Meta than put it in
if you're looking for
because
a trade, Paul,
yeah,
if you're a buy trader, meaning you'll go both ways, there could be an opportunity.
All right, that's enough on this channel.
yeah. I bought a little more Walmart. It
Yeah.
swung down and go about Walmart.
Good company. We're gonna need
Good
it
company, but you're not going to make a lot of money. But it's
over time.
I always,
All right, guys. Thank you again. Thank you
All
for
right, guys.
participation. Thank you for always giving me an opportunity to think about something new over the weekend. So,
Thank you, Mark
Yep.
and Trent.
yeah,
Appreciate
thank you, guys. Appreciate it. We'll see you at 3:00.
it. Yep.
See you
Bye,
later.
guys. Bye.
all right.